What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 5th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time about not getting caught 2 steps behind, not getting caught up in every single trend that everyone's talking about, and rather focusing on emerging trends, trying to invest or capture investments in the sectors that people aren't exactly buzzing about just yet, but are showing signs of promise. We're going to be talking about not only how you can take a more passive investment strategy, which in many cases works best for most people, but also how you can smartly go about trading cycles and trading trends. So without further ado, let's go ahead and put some context on the situation and start off on CoinMarketCap. Just like any other coin aggregate website, it's going to be giving you a ton of data. And the problem with this data is, although it can be incredibly useful, it can sometimes be a bit overwhelming for a newcomer, especially when you're taking a look through the crypto market. And just alone on CoinMarketCap, which again hasn't listed every single crypto that's existed, we've had over 13,642 cryptocurrencies, at least according to CoinMarketCap. That's insane. And the reason why it's insane is not an insult to any of the coin aggregate websites like CoinMarketCap. It's just because there's so much to keep up with. Now, thankfully, we do have a very passive strategy here, a winning strategy, which is probably investing in some of the large cap plays in the market that still have phenomenal growth potential. This is the one thing I really don't like, that it's a perspective that a lot of people have, because we get greedy in crypto sometimes, which is that, Bitcoin's only going to go to 200K sometime in the next year or so, right? I mean, that's a phenomenal return from $62,000, right? So again, you're not going to get any market that's going to pull the returns of Bitcoin, Ethereum, and other various cryptocurrencies, right? Even the large caps are going to do really good, right? But my main point here is that in this market, as Bitcoin has been, at least over the past couple weeks, and still overall in the cycles perform well, there are some very generally safe bets or plays that you can assume will outpace Bitcoin. New sectors that are emerging, like DeFi and play to earn. And because of these new sectors and all these new kind of focus points within the crypto space that have really solidified themselves, compared to back to 2017, where it was just anything kind of went, right? Anything goes. Well, this time around, we've had a lot of interesting sectors starting to get serious traction. Ones like DeFi that we're big on, play to earn, NFTs, the metaverse, all kinds of different things, enterprise, blockchain, and other layer 1 protocols. And we can see that right now, since back in the midpoint of October, where everyone was really fearful that altcoin dominance was going to be kicking downward, we're up from 52.5% all the way up to nearly 57%. We're right under it. And this is, again, a sign of going against the trend, right? Bucking the trend, basically. Don't follow the crowd, right? So let's go ahead and talk about what that is. Let's talk about what it isn't, right? Let's say what happens if you follow the trend. Well, you might find yourself in something that's all the buzz, all the rage, with no serious fundamentals or substantial long-term community, and probably has some really big bag holders, some very big people who got in very early. And that's a play like Shiba Inu. Now, again, we talked about meme coins back a while ago. And look, overall, I know there are some arguments about Shiba. They're building an ecosystem, and they're building features, and whatever. But truth be told, the fundamental thing that matters with these plays is, do they have any substantiated grounds? Do they have a community that's actually building things, doing things, creating value, utilizing these applications? Vast majority of sheepholders aren't. And outside of that, we know that there is a huge amount of whales who started to unload on the market. Hence why we've been down 46% here over the last 8 trading days. Now, look, overall, I got to tell you guys, if you were buzzing about Shiba up here, this is a time to build that slight allocation if you think that this is going to kick up for another rally. I'm not saying that, but again, what I don't like is when people FOMO when everyone's talking about it, and then when it comes down 40, 50%, you'd love to go buy a favorite pair of shoes down 40, 50%. No one's willing to do that when it comes to investment. Like, oh, no one's talking about it now. It's going to zero. I don't know, maybe it's not going to zero, right? So that's the key thing here. I haven't built any position in it, so I hope you guys don't think I've changed my mind per se, or have gone biased on it. But my narrative or point here is that you can't follow the emotional trend of the crowd. You have to be a contrarian. That doesn't mean you have to be a bear when the market is bullish, but don't fall into every single trend that everyone's buzzing about, right? It's likely that if people are raging about it and your grandma's talking about it, it's probably at the later phases of the trend, right? No offense. I know we got some great grandmas coming into the channel. So the thing here is, as we talked about, not getting caught in every single trend. And the really unfortunate thing here, when people are investing in meme tokens, which have been all the rage now, they miss out on a lot of great plays that are going to make consecutive higher lows and higher highs. That's a general sign of an uptrend, right? No matter how volatile things are, if things are generally moving in an uptrend like Bitcoin, then that's great. And if they're making returns that blow out of the wazoo compared to what you see in traditional markets and equities like stocks and as well as commodities and bonds and forex markets, right? Crypto is one of the best performing markets. If you can catch some of these emerging sectors, you're going to do great. Right? You're going to make great returns if you can ignore the volatility. So there's all kinds of stuff going on. There's play to earn, which has been all the buzz. And we did a big piece on play to earn within the recent Dash report. It's our newsletter we do here on the channel. And we did a really nice written article talking about the kind of the concept of the metaverse, play to earn, NFTs. Right? We've done a couple articles now. But the recent one we really focused on is play to earn. And I highly recommend, if you guys are interested, to check out the link in the description to sign up for the Dash report. It's a fresh report, just dropped a couple days ago. And again, I think that overall this sector's got a bit of potential here. It's something at least we have to no longer ignore and have some focus on, right? And there's tons of plays here that you could look into. Although I would recommend, just to give you guys a bare minimum here, of having a general cutoff around like the $50, $100 million market cap range. Above there, I think you've got some quality plays to look at. Outside of that as well, category we've been talking about, DeFi, right? Even the large cap plays like Uni are a solid play to watch at this point. They've been at a discount, they've been accumulating, they've been relatively quiet, right? These are the kind of things that we want to watch out for here for potential opportunity. And there's a ton of other DeFi plays here and various ecosystems from Ethereum, Binance Smart Chain, Avalanche, Solana. It doesn't really matter what ecosystem you want to invest in. I would recommend getting some good diverse exposure either through the Ethereum ecosystem first and then eventually trickle down in some of the smaller ecosystems if you do believe that they're going to continue to expand. But the big thing here is that people get caught up in these sporadic one-off trends. It's very 2017-esque, where people just are rapidly piling into something. And whether they know it or not, they're unfortunately just committing a short-term pump and dump, basically. The unfortunate thing, though, is that they're propping up the price in this case or playing into the later stages. And really, at the end of it all, they're getting dumped on by some large whales who have utilized and manipulated them. And that's really unfortunate, right? That's just what happens when it comes to these meme coins. It's happened time and time again, where we find major concentrations of tokens in the hands of a few people, not much innovation going on, not much long-term investing in the project. And again, when you take a look at a lot of these projects, they're at least having to build some sense of fundamental value because their team has a lockup. The team actually has some kind of vision to it from the start. They have some kind of product experience where they've founded companies or projects before. So again, you've got so much great value plays. Why dilute it on some noisy opportunities? Yeah, sure, you might be able to make a 10x, 20x return or more, but it's a very, very rare opportunity to be able to hit that, and you're much more likely to lose money in the end or not outpace the market. Right? And that almost burns just as much. Like, yeah, you made a return, but hey, I followed this trend, and now all the other plays I was holding or other people were holding that were much more normal and not meme coins, now they're starting to really charter up. Why am I missing out on the fun, right? We don't want you guys missing out on the fun here. I want you guys to make the most of this cycle. Now, on that point here, one thing I get commonly asked a lot, and I think it's a very important point. If you're here right now, this is probably something that's on the minds of a lot of you watching, which is like, Nick, look, I don't like to trade too much. Maybe I want to get some exposure to these sectors, but I don't want to think about trading the ups and downs and that volatility that we referred to earlier. Well, one really great way to mitigate and not even be worried about this volatility is to dollar cost average. And one really interesting way this is happening right now, New York City mayor, the new elect in New York City, it's a pretty big position, right? The mayor of New York City has come out, this is Eric Adams, he said he'll take his first 3 paychecks in crypto, right? My understanding, he's going to get his first 3 paychecks. He's going to be a bit more passive. He's going to get 3 paychecks in Bitcoin. And all the while, that is still going to be great, in my opinion. I think Bitcoin's going to continue to perform better than fiat currency in the long run, just getting your money in fiat and letting it sit in a bank account, right? So I think Eric Adams is down the right alley here. This is a strategy that many people will be able to employ very, very soon. We're launching a feature within Digifox, the crypto wallet I self-funded and we raised from the community as well, from a lot of you out there who watch the Data Dash channel. And we're launching this feature that's going to allow anyone in the United States as a W-2 employee and eventually contract employees, as well as the UK and EU eventually, to be able to receive a portion or all of their salary in the form of cryptocurrencies post-tax. So we're really excited about this feature. It's going to allow you to get exposure to Bitcoin, Ethereum, Litecoin. And for me personally, once we launch the feature, I'm going to give you guys a little tidbit secret. I'm really thinking about going heavy in on Ethereum and possibly getting some exposure to Bitcoin and just a tad bit maybe to Litecoin. But I think I'm going to probably stick to two, probably do Ethereum and Bitcoin, probably around 75% Ethereum, 25% Bitcoin. Because for me, I love knowing that dollar cost averaging is going to beat the market out 88% of the time. It's a great winning strategy. It's passive. You don't have to worry about going all in at one point. And the best thing is the volatility just kind of fades away, right? It's fun to watch the price going up and down, but generally speaking, that dollar cost averaging is a winning strategy that's going to ride that momentum of Bitcoin's increase over time, where you don't have to worry about the state of the market, right? Because we know Bitcoin cryptocurrencies are going to outpace the market. So if you guys are interested, you guys can join the waitlist for it. We really recommend you guys join stuff. We've got a good group of people already signed up on the waitlist, and we're really excited to be taking this feature to the crypto space to hopefully avoid all the ridiculous sporadic meme coins that come up. Everyone buys them, and then of course gets dumped on or exit scammed. We actually, one thing I just want to take some respected credit for in this case. Usually we get some calls right and wrong here on the channel, but I wanted to talk about Squid Game, which we literally were talking about on the channel as a potential Ponzi or scam in this case. Back when it was actually, I think here on CoinMarketCap doesn't even show it, is around like $1,000 something, and literally less than an hour later, the founders exited on the coin and ran away with a good couple $1 million of free money, and knocked down the market cap from whatever it was. I think it was like a couple $100 billion to 43 million. Of course, it shows you how fake market cap can be. That's why we say that market cap can be ridiculous in crypto. Don't use it as a go-to metric for the market. But you see people, and this is just how crazy it is. People are now starting to trade the coin yet again, right? I can see it. Maybe I'll get it here on the 7-day. And we'll shrink it down a bit. You can see people are now starting to trade an exit scam token. It's like, and still, even though like people might be buying here, making money, the thing is, guys, the vast majority of people lost money, right? The reason why is because it didn't even allow you to sell tokens. So this is the kind of stuff that I just think you're better off avoiding, guys. If you want to toss $100 here and there, hey, be my guest. If you want to treat it like a lottery ticket, it's all cool. I'm all about having a little bit of fun. I've gone to the casino before and played with $100, $200, but I'm never going to play with my life savings. And you shouldn't either. Look, I'm not a financial advisor, but that's some financial advice right there. You should not be speculating on rampant, speculative, potentially exit scamming or rug pulling projects that are going to try to take your life savings in the process. I think that's a bit of friendly advice as well. I hope you guys can heed to that and utilize it in your crypto trading journey. All right. That's it for the video, guys. I've rambled on enough. If you guys are interested in the waitlist, you guys can always check out the link down below in the description. If you guys want to sign up for the newsletter where you guys can learn about some of the really interesting sectors that we cover in the crypto space, some of the plays that were long, you guys can get access to my percentage portfolio in crypto for my investment portfolio. There's all kinds of different things you can get access to for the Dash Report. But until the next video, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.